Scott Bauer, the CEO of Prosper Trading Academy, standing by. And Scott, it's good to have you with us to start the week here. How about the dollar last week? What was behind the bid?
Just more uncertainty in the marketplace. Maybe the optimism around what's going on with China, and then just some what I think, Ben, just no news in the marketplace. But then over the weekend here, you see what happens. We got news coming out of England just overnight that it looks like they've taken the next step towards a successful Brexit, if that makes sense. And the pound has rallied, the dollar is weaker. So, it's really a fluid situation. But you look at last week, and I think that it was really a lot of no safe haven type of trade and no big uncertainty, no newsworthy event that made the dollar really move one way or the other. And the bottom line is the dollar is the underlying strength, the underlying currency of the world. No news is good news.
Yeah, Scott, I completely agree with you in terms of some of the influence being specifically the British pound, the euro currency. We continue to see weak eco data out of Europe, out of the UK. Overnight, even, numbers out showed the slowest annual growth since 2010. You mentioned the Brexit impact. I guess my next question is, how long will this last? I mean, certainly seems like it could throughout the end of this year and to begin next year as well. It seems like we have these risks, these uncertainties, and potential catalysts available.
Yeah, just because we got this news last night doesn't mean the Brexit situation is over. So I don't think that removes the uncertainty out of the marketplace here. And I think what will happen is after some of the, let's call it euphoria, dies down from that, the market is going to look back to what you just mentioned and some of that economic data that came out showing the continued weakness in the space there.
So is it a services, is it a production, or a manufacturing focus? Because here in the U.S., it seems like the focus is on services, on the consumer. Seems like in Europe, though, the focus has really been on manufacturing, some of the concerns out of Germany, autos, and some of the numbers there. And I can understand why in many ways, Scott, because if that's where the epicenter is and we start to see that ripple effect, it could take a little while for us to feel it. And ultimately, it would seem like the consumer, if it's deeply entrenched in terms of manufacturing slowdown, that would be the next area that we should look for.
Yeah, there's no doubt coming out of the Euro space that that's what it is, especially the weak German numbers that we've seen. So the manufacturing space is extremely, extremely weak. I mean, it's not going to turn around anytime soon. And the concern is, Ben, like you just mentioned, we've seen the consumer here just stay as staunchly, strong as could be. But is that going to start rippling down? I mean, the weak data coming out of the Euro space here could be that leading indicator, like you just said, that we don't see any effect here maybe for 3 to 6 months down the road.
Any expectations that we'll get some insight from Fed Chair Jerome Powell, set to speak this Wednesday? Any thoughts on how closely watchful this be, Scott?
Yeah, I don't think he's going to rock the boat at all. I think he's going to stay pretty much on script of what he said, after the announcement, when they lowered rates again a couple weeks ago, is that, the economy is a fluid situation. We're going to watch, Brexit situation. We're going to watch the tariff issue, and we'll adjust if necessary. I can't imagine he's going to tip his hand one way or the other, dovish or hawkish on the other side as to what may happen. I don't believe he's going to say anything about a potential rate cut in December. I think that, the market is what, 50-50 on that right now. I don't think there's going to be any talk of that at all.
Yeah, Scott, looks like kind of a quiet day down there with the bonds closed, but let's talk a little bit about the dollar and the disconnect from rates and from the bonds for the most part of 2019. Really very little tie there in terms of the connection you'd expect to see when rates rally. You normally see the dollar rally, but that certainly wasn't the case. I asked you how long you think the Brexit and some of the uncertainties are going to play out in terms of the UK and the Eurozone. How long do you expect this disconnect from the U.S. dollar and rates to continue to play out? I mean, it does seem like over the last week or so, the dollar seems to be focusing a little bit more on rates as they started to rally a little bit.
Yeah, I think that with all of the uncertainty, not just with Brexit, but certainly continuing with the U.S. and China, which really leads to, globally what is happening here, that's not going away anytime soon, Ben.
Okay.
So I think that this disconnect we've seen is going to be here for a while. At some point, whether it's 6 months down the road, 9 months, a year, we should see the historical patterns start to come back into place, but I don't see that happening anytime soon.
Noted, and a big part of that dollar strength that we've been seeing and disconnect from rates has been as it's been influenced back by the British pound and some of the other currencies we talked about. So we kind of go full circle, wash, rinse, repeat in terms of some of these influences that have been playing out here and ultimately why we're seeing the trend of the upside. Scott, really appreciate you joining us here on a Monday morning and helping us get the
Ben.
future show started right here.